Good morning, ladies and gentlemen. Today we're going to be covering Box earnings, giving you the bull and the bear case. And I actually was inspired to do this video based on an article that I saw this morning about this company's earnings. So figure if someone's going to publish an article, why not cover it to see what popularity we get from it. So as you can see here, Box is trading higher after reporting these earnings. So they did have a beat on earnings. Their revenue and their EPS both beat. The EPS was actually a significant surprise, about 17% beat, and then revenue came in line, about 1% beat, so just roughly in line. It actually beat by about $1 million, but again, as a percentage base, this is not a crazy big beat, but overall upbeat for the company. And you can see here, first off, the stock has been in this very wide consolidation, so now we're finally getting a breakout of it. You could have said today maybe was a fake breakout of the earnings, but then again, I lean towards this being a more solid move up. You have MACD basically forming higher lows as you're going up, as prices are forming higher lows, so no divergence is present there. We see that the possibility, and most likely now based on the earnings report, that this MACD is going to cross the upside. So Box has a lot of room to run, guys. This company has a massive gap off the previous earnings right here. So now the question is, could we start filling that gap? And the simplest answer, or the simplest question we have to ask ourselves, can you get above the $29.75 mark and actually keep going? Now, this is an area where there is a reversal zone. So basically, you're going to have to be very careful once you get into that area. But looking at how the price action is, having a huge earnings gap here and the MACD having strength, I definitely think you could get up there. Really, it's going to be what the bull and the bear are going to be decided when you get to $29.75. And what do you do? Do you just stall out completely, or do you go higher? Now, as of the recording of this video, it's 5:53. We need to see what this stock does tomorrow, or in this time when you guys are watching it today, where it closes today, and see if it closes significantly higher than where it opens. That would show continuation, volume ramping, all these good things that we look for a stock. Now, if it fails to hold that, then I'd be looking to retrace at least down to the 26.38. That's where I'd be looking to buy it. But if we look at the weekly to give us a more indication of where this stock could be going, and you pretty much see that the MACD is actually giving you a bullish sign. So again, we're gonna have to see how the stock trades during the week, but I'm gonna assume the MACD is gonna curl up higher, and you may actually get a divergence to the upside where you have MACD heading higher but pricing lower. That is a bullish sentiment for the stock, especially this being on a weekly graph. You have significant divergence of the MACD from one another. So again, this is going to be very bullish. It's a very bullish setup. RSI is about to cross, and probably crossing right now on the weekly based on where this price is going to be. So it has a plenty room to run. And if we cross, let's take the bullish scenario first. If we cross this location here of 29.75, then where could we run? We could easily, I'm going to say half a gap filled. I'm going to be conservative when I say that, guys, just because it had a previous area of support right here at the 31.68 area. So 31.60, that's where I'd be looking to possibly take my initial profits on. And then if we get a complete gap fill all the way up to 33.24, that's where I basically say, hey, I'm checking my cash out. Thank you very much. Move on. So with all that said, what could be the bear case? Well, the bear case is you get an exhaustion here, but you need to see if you come back to fill this earnings gap. Basically, the way I would play a bearish scenario on this company is we establish a range on earnings and then we start falling back below it. If we fall back below it, that is where I start to get bearish on the company, but it does have a lot of structure sitting around this 26.62 all the way down to 24.42. At that point, that'd be an excellent buy, just because you had a lot of price action here. I'm going to say the middle of the price action, $27 flat, is where you see a lot of accumulation that people are going to want to defend that price point. And there's not a lot of signal that's telling me that you're going to get a bearish reaction. Now, things could change between now and tomorrow, and the next day you could get a debt ceiling thing completely fall apart and the whole market go collapsing down together. But again, trade the stock how it's presenting, not necessarily by every little thing that can possibly happen. So based on the price action right now, I'd be leaning 75% bullish, 25% bearish. That's just my own personal assumptions. The gap fill is definitely going to be an interesting play, especially the weekly showing extreme strength, and even the monthly kind of just jagged all over. But this stock really hasn't had a long history of seeing it IPO'd back in 2015. It doesn't really have a long history, like for example, like the S&P 500. Now, we do have a sell signal from Relux Algo here. However, I'm not necessarily going to trust that just because I see more bullish things setting up on the stock itself, and that's how I'd be looking to play it out. You had a strong earnings and a possibly strong move as a result of those earnings. Now, this is my warning signs. This is the checklist, let's put it that way. If you start failing and filling the gap on the earnings day, then I'd definitely be looking more bearish, just because it would be a failed breakout of this range, which then possibly puts all these lower targets into play of $26.51. I'm going to say even this consolidation region of $27, and then possibly the $25.50 area would be my next targets. But again, until that bearish scenario actually plays out on the chart, you can't really stay bearish on this company, especially with the larger time frames giving you a significantly larger indication of what it's doing. And we're going to quickly jump over the SMAs just to see if it has any hidden things that are throwing us any clue. So looking at the SMAs, you can clearly see that we are now breaching above the 200 and the 50 weekly. So this is a very bullish sign for the company. You're broke above the 50. Now you're starting to tackle these upper price actions. The most bullish thing you could possibly do, let's say we open, retest the 200 and bounce right back. That is probably the most bullish thing that could happen here, and that's what I'd possibly be looking for, because one, you'd be defending price action, creating structure, and pushing higher. And then that gap fill would definitely easily be supported by those moving averages, probably the 50 curling up further, crossing over the 200, giving you that golden cross scenario, and then heading up higher. So in my opinion, the stock definitely has the ability to run higher, and it has a lot of bullish signals on it. However, be careful for that earnings gap fill that could possibly play out, but wait to see it play out and then make your moves. It would be my recommendation. If you guys have any companies you guys want us to review, throw it down in the comment section below. If you liked this video, throw a like on the video. It really helps with the YouTube algorithm. And consider subscribing. We do weekly weekend deep dives, along with doing a viewer requested ticker Friday, where we go over all the tickers that you guys request during the week, kind of conglomerate just to give back to the community. So I hope you have a wonderful day and a wonderful week. Thank you for watching.